Chinese real estate market, which was once a shining beacon of the country's rapid economic ascent, now threatens to become a $7 trillion catastrophe. This market has expanded into a substantial bubble that has the potential to disrupt not only China, but the entire global economy as a result of aggressive government policies, speculative investments, and unremitting urbanization. A picture of an impending crisis is painted by ghost cities, astronomical debt levels, and overbuilt infrastructure. The question that looms as the world observes is whether this bubble could burst, resulting in a financial shockwave that extends far beyond China's borders. 1. The real estate market's expansion and rapid urbanization. The rapid urbanization of China has been a significant factor in the country's economic development, as millions of individuals have relocated from rural areas to urban centers, resulting in a significant demand for infrastructure and housing. In order to stimulate the economy, the government promoted this trend, which resulted in a construction surge that resulted in the construction of entire cities, frequently prior to the existence of sufficient demand. This resulted in ghost cities with a minimal population. Property values surged as individuals perceived residences as both investments and necessities, resulting in real estate's rapid transformation into a significant economic force. The market has been prone to correction as a result of the misalignment between actual demand and the focus on real estate, which accounts for nearly 30% of GDP. 2. Speculative investment in the formation of the bubble. The Chinese real estate market has experienced substantial speculative investment, which has been fueled by the scarcity of alternative investment opportunities. Real estate is perceived as a dependable method of increasing wealth, resulting in an increase in the acquisition of property, frequently for speculation rather than personal use. Investors frequently acquire numerous properties, occasionally in cities where they do not reside, in anticipation of price appreciation. This speculative behavior has resulted in an increase in property prices that exceeds the level of justification provided by fundamental factors such as income levels or actual housing demand. This hysteria has been further exacerbated by the ease of access to credit, resulting in a significant number of properties remaining vacant as owners anticipate higher prices. This speculation has resulted in a market that is highly susceptible to a downturn, as it is now disconnected from the actual economy. 3. The role of state-owned enterprises, SOEs, and government policies. The Chinese real estate market has been characterized by substantial speculative investment, which has been fueled by both corporations and individuals. Real estate is perceived as a dependable method of preserving and increasing wealth due to the scarcity of alternative investment options, which has resulted in a significant increase in the acquisition of property for speculative purposes. Investors frequently acquire numerous properties, occasionally in cities where they do not reside, in anticipation of price appreciation. Housing has become increasingly unaffordable as a result of this speculation, which has inflated property prices beyond what is supported by income levels or actual demand. This speculative frenzy has been further exacerbated by the ease of access to credit, as banks are keen to lend for property purchases. Consequently, the market has become disassociated from the actual economy, resulting in a significant number of properties remaining vacant as owners anticipate an increase in prices. This speculative speculation is highly susceptible to a downturn, as it is driven by expectations rather than genuine demand. 4. Financial risks and debt issues. The accumulation of debt by developers, investors, and residents is one of the most alarming aspects of the China real estate bubble. The real estate market's rapid growth has been stimulated by the widespread availability of credit, as both purchasers and developers have incurred substantial debt to fund their investments. Developers have frequently incurred debt that exceeds their capacity to repay in order to finance substantial initiatives. A precarious situation has been established in which any tightening of credit conditions could result in a wave of defaults, as a significant number of these loans are short-term and requires rolling over. The viability of China's financial system has been a source of concern due to the high level of corporate debt in the real estate sector. A collapse in the property market could potentially precipitate a more extensive financial crisis. Homebuyers have also accrued substantial mortgage debt, frequently exceeding their financial capacity to acquire properties in an inflated market. Many Chinese citizens are highly leveraged, with a significant portion of their wealth being invested in property as a result of the high levels of household debt. Widespread financial distress among households could result from a substantial decline in property prices, which would further exacerbate the economic downturn. 5. The consequences of overbuilding and ghost cities. The ghost cities phenomenon is one of the most apparent indicators of the real estate speculation in China. These are substantial urban developments that contain a significant amount of housing and infrastructure, but have a drastically reduced number of residents. The real estate market has been driven by speculative investment and the aggressive push for urbanization, resulting in the emergence of ghost cities. Overbuilding has been prevalent in numerous regions of China, as developers have constructed substantial quantities of commercial or residential space without regard for the actual demand. The consequence is that entire cities are essentially uninhabited, with deserted streets and empty apartment buildings. These ghost communities are a stark reminder of the risks associated with unchecked speculative investment and a significant misallocation of resources. The broader issue of overcapacity in the real estate sector is also underscored by the existence of ghost cities. A surplus of unclaimed properties has resulted from numerous developers' construction of an excessive number of units that cannot be rented or sold. The overall instability of the market has been exacerbated by the downward pressure on prices in certain regions as a result of this overcapacity. The financial viability of the developers behind these developments is being brought into question as more remain unsold or uninhabited, thereby increasing the risk of defaults and further market disruptions. 6. The global consequences of a market correction. The Chinese real estate boom has reached a juncture at which numerous experts predict that a market correction is inevitable. A market that is highly susceptible to a decline has been established as a result of the combination of speculative investment, high levels of debt, and overbuilding. A substantial decline in property prices could result in a broader economic slowdown, pervasive defaults among developers, and financial distress among homeowners. The potential consequences of a real estate market correction in China are far-reaching and extend beyond its borders. A collapse in the real estate market could have severe global repercussions due to the scale of China's economy and its integration into the global financial system. International investors, institutions, and corporations that have exposure to the Chinese market may experience substantial losses, which could result in a more extensive financial crisis. Additionally, a deceleration in China's economy could have a ripple effect on the global economy, particularly in countries that are significantly dependent on trade with China. The demand for commodities, manufacturing products, and other exports may decrease, resulting in economic instability and slower growth in other regions of the world. The risks associated with the China real estate speculation are not limited to China, rather they have the potential to precipitate a more extensive economic crisis due to the global economy's interconnectedness. 7. The future of the real estate market and government responses. The Chinese government is acutely aware of the risks associated with the real estate inflation and has been taking measures to mitigate the situation. Nevertheless, it has been difficult to reconcile the desire to preserve economic development with the necessity of stabilizing the market. The government has implemented a variety of measures, such as promoting the development of affordable housing, increasing regulatory supervision, and tightening credit. The fundamental issues in the real estate market persist, despite these endeavors. A soft landing may be challenging to achieve due to the high levels of debt and speculative investment, as well as the sheer magnitude of the bubble. The government is confronted with a challenging balancing act as the potential for a sharp downturn is heightened by excessively aggressive measures to cool the market, while the risk of an even more severe correction in the future is heightened by a lack of action, which could enable the bubble to continue inflating. The future of China's real estate market will be contingent upon the market's capacity to self-correct and the efficacy of government policies. Although there are indications that the government is dedicated to resolving the issues in the real estate sector, the future is rife with obstacles. The China real estate crisis is one of the most critical economic issues of our time, as the outcome will have significant implications for both the global and Chinese economies. In conclusion, one of the most substantial financial hazards in the current global economy is the $7 trillion China real estate bubble. The inflation has established a market that is exceedingly susceptible to a correction, which is fueled by speculative investment, rapid urbanization, and government policies. The real estate market's potential for a substantial decline poses significant risks to the global financial system and China's economy. The world is closely monitoring the Chinese government's efforts to address the bubble, as the repercussions of a real estate catastrophe in China could be felt far beyond its borders. Let us know in the comments what you think about the $17 China real estate bubble, and don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.